If you are a senior citizen anywhere in the United Kingdom, stop scrolling right now, because this next 15 minutes could protect your entire income. My name is UK Housing Alert, and today I am going to reveal 3 money moves the government does not want you rushing to claim. Every single week, thousands of British pensioners lose money simply because nobody told them these rules changed, and July is the month that matters most. This channel exists for one reason only: to make sure seniors like you get every single penny that already belongs to you, no exceptions. If you are already subscribed to UK Housing Alert, thank you, and if you are new here, hit that subscribe button before you forget. Because every video on this channel is built to protect your pension, your savings, and your home from rules that quietly change every year. Today we are talking about 3 specific money moves that every senior in England, Scotland, Wales, and Northern Ireland needs to act on now. Miss even one of these, and you could be losing hundreds, sometimes thousands, of pounds a year that belongs in your account. The first money move involves a free benefit worth £180 a year that most eligible seniors never even apply for. The second money move is a weekly payment worth up to £114 that has nothing to do with your income. The third money move affects your actual state pension amount, and thousands of people are being paid the wrong figure without even realizing it. Stay with me until the end, because I will show you exactly how to check, claim, and correct all 3 before it is too late. And if this video helps you, please comment the word claimed once you have taken action, because I read every single comment personally. Now let us start with money move number 1, the free benefit that quietly disappears if you do not apply for it yourself. Money move number 1 is pension credit, and it is the single most important benefit for seniors in the entire country right now. Pension credit is a top-up for people over state pension age on a low income, and it is completely separate from your state pension. For the 2026 to 2027 tax year, pension credit tops up a single person's weekly income to £238 exactly. For couples, that weekly top-up rises to £363.25, paid directly into your bank account. You can still qualify even if you own your home, have savings, or receive a small workplace pension, so never assume you earn too much. Here's what most people do not realize. Pension credit is not just cash, it is the key that unlocks several other benefits at once. Once you receive pension credit, you can apply for the free TV license at 75, worth £180 a year. Since August 2020, that TV license has never been automatic. You must personally apply through TV licensing once your pension credit is confirmed. You can even apply for it at age 74, so your free license is ready the exact moment your 75th birthday arrives. Pension credit also opens the door to council tax reduction, which can lower or completely wipe out your council tax bill every single year. On top of that, Guarantee Pension Credit qualifies you for the Warm Home Discount, worth £150 off your electricity bill. Pension credit claims can sometimes be backdated by up to 3 months, so do not assume you have missed out just because time has passed. If you have savings over £10,000, your pension credit amount may be reduced, but you can often still receive a smaller payment. Even a small weekly pension credit award of just £1 can be enough to unlock the free TV license and other passported benefits. You can apply for pension credit by phone, by post, or online through gov.uk, and the whole process usually takes under an hour. Have your national insurance number, bank details, and income information ready, because it makes the application faster and much less stressful overall. Think about Brian, a case shared by a retirement advice charity who paid his full TV license for a year after turning 75. Brian assumed nothing had changed until a benefits check revealed he was entitled to £14 a week in pension credit he never claimed. The moment his pension credit was approved, he applied for his free TV license too and unlocked council tax reduction the very same week. That is well over £700 a year in total, simply because he finally checked something he had ignored for months. So money move number 1 is simple. Check your pension credit eligibility today, because it is the gateway to almost everything else on this list. You can check this in minutes through the free pension credit calculator on the official GUI.uk website, or by calling the pension service. Do not let pride stop you from checking. This money is not charity, it is simply what the system already says you are owed. Now that we have covered pension credit, let us move straight into money move number 2, and this one is often missed completely. Money move number 2 is attendance allowance, and it might be the most overlooked benefit for older people anywhere in the United Kingdom. Attendance allowance is not means tested, so your savings, your pension, and your income do not affect whether you qualify for this support. It is designed for seniors over state pension age who need help or supervision because of an illness, disability, or general frailty. You do not need a formal diagnosis to claim it. Difficulty with washing, dressing, cooking, or simply staying safe at home can be enough. This benefit pays either £76.70 a week or £114.60 a week. The higher rate applies if you need help or supervision both during the day and throughout the night, not just at certain times. The lower rate applies if you only need help or supervision during the day or only during the night, but not both. Here is the part almost nobody knows. Attendance allowance does not reduce your pension credit by a single penny. It simply stacks on top. In fact, being awarded attendance allowance can trigger an extra £86.05 a week inside your pension credit itself. This is called the Severe Disability Addition, and it can push people who were just above the income threshold into full pension credit entitlement. So these two benefits are never alternatives, they compound each other, and claiming one can quietly increase the value of the other. Home ownership has absolutely no effect on attendance allowance either, so do not assume owning your house disqualifies you from this support. You claim attendance allowance using a paper form from the Department for Work and Pensions, and yes, it can feel quite long. Ask a family member, a carer, or a local Age UK advisor to help you fill it in. Honest detail matters most. You can also claim attendance allowance even if you already have a carer, a cleaner, or family members helping you around the house. There is no medical exam required to apply. Decisions are based entirely on the written form and any supporting evidence you choose to send. Many seniors underestimate their own needs on the form because they compare themselves to how they used to be, not how they are today. Describe your hardest days, not your best days, because the assessors are trying to understand the full reality of your daily struggle. If your first attendance allowance claim is refused, you have the right to challenge the decision through a mandatory reconsideration within 1 month. Many families give up after one single refusal, but thousands of decisions are overturned every year once proper evidence is finally submitted. Age UK, Independent Age, and Citizens Advice all offer free help filling in this form, and their support can make a real difference. Attendance allowance is one of the least claimed benefits in the entire country, simply because too many people assume they will not qualify. Once approved, attendance allowance is paid every 4 weeks directly into your account, and it is completely tax-free for the rest of your life. It also does not need to be reported as income for most other benefits, which is exactly why it works so well alongside pension credit. So money move number 2 is this. If you struggle with daily living, apply for attendance allowance before you assume you will not qualify. Do not wait for a crisis to apply. Thousands of pounds a year are sitting behind a single form that many seniors never even request. Now let us move to money move number 3, and this one involves a payment that many pensioners lose without ever noticing. Money move number 3 is the winter fuel payment, and this year it comes with a clawback rule that catches thousands of people out. Every household with someone over state pension age now receives the winter fuel payment automatically, worth either £200 or £300. You do not need to apply. It lands straight in your bank account in November or December, based on your age and living situation. But here is the critical part. If your individual taxable income is over £35,000 a year, HMRC takes the entire payment back. This threshold is per person, not per household, so your partner's income does not count when working out whether your payment is safe. Taxable income includes your state pension, private pensions, employment earnings, and savings interest outside an ISA, but not pension credit or attendance allowance. For most people, this clawback happens quietly through a change to your tax code the following year, without you having to do anything. If you know your income will be over the threshold, you can opt out completely, so you never receive a payment taken back later. For winter 2026 to 2027, the qualifying week runs from the 21st to the 27th of September, so mark your calendar. If you want to opt out for this winter, the deadline to contact the Winter Fuel Payment Center is the 20th of September 2026. Missing that deadline means accepting the payment and having it recovered later through your tax code, which can feel like an unexpected extra tax bill. The winter fuel payment reference on your bank statement begins with your national insurance number, followed by the letters DWP and WFP. Beware of scam texts and emails claiming you must click a link to claim your winter fuel payment, because that payment is always automatic. The government will never ask for your bank details or personal information by text message to release a winter fuel payment to you. If you have never received a state pension or any DWP benefit before, you may need to manually claim your winter fuel payment yourself. Now, let us talk about the final part of this money move, and it affects almost every single senior watching this video right now. Your actual state pension amount may not be what you think it is, and thousands of people are quietly being paid the wrong figure. For the 2026 to 2027 tax year, the full new state pension is £241.30 a week. That works out to £12,548 a year, but only if you have 35 qualifying years of contributions. If you reach state pension age before April 2016, you are likely on the basic state pension instead, currently worth different amounts entirely. The full basic state pension for 2026 to 2027 is £184.90 a week if you qualify. To get that full basic state pension amount, you usually need at least 30 years of national insurance contributions recorded against your name. Both pensions rise every April under the triple lock, taking the highest of inflation, average wage growth, or 2.5%. This year that rise was 4.8%, but many pensioners never actually check whether that new rate reached their account correctly. Underpayments have been especially common among married women, widows, and people who reached pension age under the old rules before April 2016. Your state pension forecast also shows exactly how many qualifying years you have, and how many more years you still need to contribute. If you have gaps in your national insurance record, you may be able to fill them voluntarily and increase your future weekly pension. If you have never checked your national insurance record, do it today, because gaps in your contribution history directly reduce your weekly payment. You can check your state pension forecast for free on the gov.uk website using your government gateway login in under 10 minutes. If a figure looks wrong or lower than you expected, contact the pension service directly and ask them to review your record in full. So money move number 3 is this: confirm your winter fuel payment status and confirm your exact state pension rate, both in the same week. 3 separate checks, 3 separate government systems, and every single one of them could be quietly costing you real money right now. Every single one of these 3 checks is completely free, official, and government approved, so there is genuinely nothing for you to lose. Let us quickly recap all 3 money moves before you go, because I want this to stick with you long after this video ends. Money move number 1, check your pension credit eligibility, because it can add hundreds of pounds a week and unlock several other benefits instantly. Money move number 2, apply for attendance allowance if you struggle with any part of daily living, because it does not reduce your other benefits. Money move number 3, confirm your winter fuel payment threshold and double-check your exact state pension rate before this September's deadline arrives. None of this is complicated once you know where to look, but nobody in government is going to knock on your door and explain it. That is exactly why this channel, UK Housing Alert, exists, to translate confusing rules into simple steps you can actually act on today. If this video gave you clarity or saved you money, the most helpful thing you can do is press that subscribe button right now. Turn on notifications too, because new rules for seniors change constantly, and I cover every single one the moment it becomes official. If you found even one of these 3 money moves useful, please give this video a thumbs up. It genuinely helps this channel grow. Comment below and tell me which of the 3 money moves applies to you. I personally read and replied to every single comment. And please share this video with a parent, a grandparent, a neighbor, or anyone over state pension age who needs to hear this today. Somebody in your life is almost certainly missing one of these 3 benefits right now, and your share could be the reason they finally check. Thousands of seniors are one simple form away from money that already belongs to them, and this video could be the reason they claim it. This is UK Housing Alert, and I will see you in the next video with more rules and more money you deserve to keep.